Immovable means any property which cannot be moved from one place to another place. For short term, whatever gain you got, again if you invest, then you can claim exemption. Unlisted shares means the buyers and sellers will be less, the movement will be less, the fluctuations will be less. That's why it will come under 24 months category. 54G for long term, machinery, urban to rural. A warm welcome to one and all. This is your Adasa here, lecturing Vidhyaashram First Grade College, the Temple of Excellence. And now we are in the session 2, Unit 1 of your income tax. And now we are discussing Unit 1, that is capital gains. Now, under capital gain, in the previous session, we discussed about what is capital gain, what are the capital assets which are not comes under capital asset, and also the basic format of short-term as well as long-term capital asset we learned. Now, in today's session, what we are going to discuss? It is all about concept. Now, I told you we understood what is short-term and what is long-term. But how to classify whether it is a short-term, whether it is a long-term? What are the number of periods? How many months or how many years we are supposed to wait to consider this as short term, and how many months or how many years we are supposed to wait to consider this as short term. All those we consider and we will learn in today's session. And also we'll work out a small example problem on short term and long term. Whatever I discussed today, it is only your example problem. Similar to that, you will get problems in your examination. First, we'll understand how to determine long-term or short-term. Now, so there are many assets are there. We cannot call every asset comes under. If you follow this, it will become short-term. If doesn't follow, then it become long-term. We cannot determine the assets. In assets also, we have classification. I'll tell you how to classify, and in your examination, nothing to worry. There are 5 to 6 assets are there. Same assets will going to repeat. Like one will be residential house, your jewelry, machinery and industrial house. And the maximum it may be agricultural land. Other than this, you will not get anything. The same 5 or 6 asset will be repeated every time. And in examination, capital gain, it is not a lengthy problem. You will get like subsection 1, subsection 2, 3, 4. Like that, in single problem, you will get 3 or 4 sub-problems. Like one is on jewelry, one is on house property, one will be on machinery, one may be on vehicles. Like individual separate question they will ask you. Each may carry 2.5 or 3 marks, like that it will be. Now, your short-term and long-term, how to classify. Now, we'll go one by one. Any immovable property. What are called as immovable property? Like your immovable. Immovable means any property which cannot be moved from one place to another place. Like what is immovable? Any land. Land can you move? No. Or any assets like building. Can you move from one place to another place? No. Any immovable property, if it is less than 20 months of holding, it will become short term. Any immovable property holding more than 24 months, it will be called as long term. Now, listed equity shares. In case of shares, we don't consider 24. Why? Because the shares are very volatile. Volatile means the price are fluctuating. So, will you give me the confidence that today's Reliance share is 2,100? Same, today maybe it is a Wednesday or Thursday or Friday. The same, I'll give you 10 days time. After 10 days, will you give me guarantee the price will be 2,100? So, nothing, don't go till 10 days. I'll give you 10 minutes time. Now it is 2,100. After 10 minutes, will it be 2,100? No. Why? Because the share price every second it changes. Every second it fluctuates. That's why we consider only 12 months for shares. For other properties, we give 24 and 36. Why? Because those are not like your house price is 50 lakh now. After 5 minutes, will it become 55 lakh, 51 lakh? No, it takes time. After 1 year, yes, it will be more or less. But shares, it will fluctuate. That's why it is always very less period. If you hold share for less than 12 months, it is short term. If you hold shares for more than 12 months, we call it as long term. Hope you are clear. Yes. For example, I bought one Reliance share. Today I bought. After 6 months, I sold that share. It is a short term. I bought one Reliance share in 2021. 2022 or 23, I sold that share. That will be considered as long term. Now, hope you understood. Next, unlisted shares. In shares also, there are certain shares which are listed, which are unlisted. Remember, if the shares are not listed, then it doesn't come under your trading. So, still you can buy unlisted shares in other ways. So, unlisted shares are considered 24 months and 24 months. If you are holding less than 24, then it is short term. If you are holding more than 24, it will be long term. Unlisted shares means the buyers and sellers will be less, the movement will be less, the fluctuations will be less. That's why it will come under 24 months category. Hope you are clear. Yes. We have immovable property, listed equity, unlisted equity. These are the informations we have right now. So equity mutual funds comes under 12 months. You know what is a mutual fund? The shares and mutual funds are different. So mutual funds are less riskier than equity shares. Now, I don't go in depth actually. In depth, debt mutual fund are 36 and 36. Other than this, any other asset, your vehicle, your jewelry, or any movable machineries, all comes under 36 months. Why these are important? This is very important. Why? Because in your question paper, they will give you vehicle. So, he bought on 2001. He sold on 2004. Now, 2001 January, sold on 2004 February. Now, how many months, how many years he used? Like 2001 to 2002, 12 months. 2003, another 12, 24 months. 2004, 36 months. And February, it will be 37. So now you tell me your jewelry is a movable or immovable? Movable. Then it will come under long term because you are holding more than 36 months. Hope you are clear. Now, if you go for some house, so you have a house you bought in 2001 and you are selling it in 2002. Now, so in this what happens? Up to 24 months we have a slab. Less than 24 months, then it will be what? Short term. If you sold on 2003, it will be long term. More than 24 months will be considered as long term. You may have questions, sir, if it is exact 24 months, what it will be? Exact 24 months will be called as short term. After 24 months, if 1 day extra also, we consider it as long term. Hope you are clear. Good. Now, so hope you understood what is short term and what is long term. Other asset, remember any movable asset like your vehicles, movable machineries. If the machinery attached to the earth, then it will become like, what is machinery attached to the earth? Oil tanks. Oil tanks. Have you seen anything? Maybe any railway stations or somewhere you will find a oil stations, bigger one, which are attached to the land. If you want to remove means completely you want to dismantle. Those kind of machineries comes under immovable. Now, so immovable property, always remember 24 months, and movable property always comes under 36 months. Clear? Immovable 24, movable 36. Now, Other than that, if you go for the shares and all, it is 12 months. Other than shares, if it is a debentures, then it will be 36 months. Other than that, not debenture, debt mutual fund. Other than that, any equity shares which are unlisted, then it will come under 24 months. Hope you are clear. These are the things you are supposed to learn. Very important. Every session, every class you are learning. Clear? Yes. So I'll take much time for theory in the tax. Why? Because while doing problem, you will not find any difficulties. Why? Because you already know this. Again, I need not to explain while doing problem because you know that what is 36 months, what is 12, and what is 36. Now, computation of short-term capital gain on sale of property. Now, so we have to go for short-term and long-term. We'll compute a small example problem. Before that, I want to explain few sections which comes under your income tax. Which are those? Yes, the sections will be 54. This is the first one. Then 54B. There is a second one. And the third one, 54D. And the next one, 54F, 54G, 54G. 1, 2, 3, 4, 5, 6, 7. So don't go in depth. You're only doing BCom. For BCom, they will ask you only basic thing. Okay. Just understand what are this section. They may ask you any 1 or 2 for 5 marks. What is 54B? What is 54D? For it is 54EC. So those are your theory questions. I'll give you complete notes for theory and don't go in depth. If you are doing CA, CS, CMA or any other professional courses, then you are supposed to go in depth. But for your BCom or BBA, only what is 54, what we have to do if 54 comes. What is 54B and what we are supposed to do if it is 54B. That much only you are supposed to understand. And here if you didn't understand also no issue. While doing problem, again it will be repeated. Then you will understand much better than what you will understand now. But have the basic idea. What is 54? Oh, 54 talks about your house, like your own house. So, residential house properties. What is 54B? What is 54D? What is EC? What is F? Just understand that it will be easy for you in further. Now, so 1, 2, 3, 4, 5, 6, total 7 sections are there. Now, in this I'll bifurcate. 54, remember, I'll write L. L means what? Long term. This will come only for long term. B, long term as well as short term. And the third one is long term as well as short term. This 54 EC only for long term, F only for long term, G it is long term as well as short term, and last one will be long term as well as short term. Hope you are clear. Yes. So you have to go according to this. Remember these two and this one. Never come for your short term. Never come for your short term. First one, third one, fourth one. That is only especially for long term. The rest of the things both for short term as well as long term. Why do we use all this deduction means? Like, if for example, you bought one house for 10 lakh, you are selling for 20 lakh. So balance 10 lakh will be taxable under what? Capital gain. Now, so instead of paying 10 tax on 10 lakh, the government has given some permission. What is that permission? After selling this, whatever 20 lakh you got, in that 20 lakh, you have invested again You have invested again for one more house. Like I have house in Vijayanagara second stage and I sold and I bought one more house in Vijayanagara fourth stage. Then do I have any money with me? No, because whatever I sold, that amount I'll invested in one more house. Then if you invest in one more house, then you will be left out with zero money. How can you pay tax? For those reasons, government has given permission. If you are invested in another house, then you can claim this kind of section or deduction. So your tax will be zero then. Now, out of 10 lakh, you have invested only 7 lakh. Then only 3 lakh is taxable. Hope you are clear. Why all these sections or deductions are required means, whenever you sell, whatever profit you get, from that again you can invest. After investing, anything is left out, then only you have to pay tax. If nothing is left out, there is no tax only. Hope you are clear. Yes, that's why we use all this section. Now I'll tell you what are these sections. Now, the first one is residential house property. 54 for what? Residential house property. And the second one is agriculture. And the third one, industrial undertaking. Industrial undertaking, or else we can call it as government compulsory acquisition. So this one, any long-term capital asset. And this one again, long-term. And other than residential. Other than residential. Next one. This is like land and building or machineries. Like urban area to rural areas. Similarly, any land or building or machinery. So this is also same thing. Urban area to special economic zone. Hope you are clear. Yes. So these are the section which is actually 54 means residential house. 54B all the agriculture one. D is for industrial undertaking or government acquisition. And 54 EC for long term. 54 F for long term other than residence. And 54 G for long term machinery urban to rural. And 54 GA is for long term machinery urban to special economic zone. Urban to special economic zone. These are the things. Nothing to worry. No need to remember anything. Just remember what comes under long term, which comes under short term. In the question paper, clearly they will mention that which comes under long and which comes under short term. Only you are supposed to remember the sections. Hope you are clear. Yes. Now, we'll go with a small example problem for short term as well as long term. In this, expenditure incurred wholly and exclusively in connection with such transfer. In the last class only, I have given example. Just assume that the short term is nothing much. Already we have done. We'll spend much time on long term. Like the same example I can go. Your sale consideration is 50 lakh. Your cost is 10 lakh. Cost of improvement another 10 lakh. And gross short-term capital gain along with anything if you spend, you consider 22 lakh. Your answer is 28 lakh. Now, what happened here? Exemption you have. What is this exemption? As I told you, for short term, whatever gain you got, again if you invest, then you can claim exemption. Again, I'll repeat. Whatever income, like 28 lakh is your profit. If you use this 28 lakh for purchasing another property, then you can claim exemption. For short term, we are talking about what? Short term. What are the sections you have? 54B, 54D, 54G, 54GA. I'll go back. Short term, 54B, 54D, 54EC. Sorry, it is not long, it is for long term. 54G and 54GA, only 4. Now, B, D, G and G. These are the exemptions you can claim. Clear? What are the exemptions you will get? See, agricultural land, if you sell, you can take exemption. Any industrial government acquisition compulsory, you can claim exemption. And any long term or machinery, urban to rural area, if you are shifted, you can claim exemption. Any land and machinery, if you are shifted from urban area to special economic zone, you can claim exemption. Clear? What is special economic zone? Government has made certain areas for called as special economic zone to improve that particular area. The tax rate will be less and some exemptions they will give you to improve the industries in that particular place. Now, hope you understood these are the sections you have and these are the sections you can claim as deduction under short term. Now, we'll go to long term. Under long term, same procedure. Just I am supposed to explain you what is index cost. The rest of the things already I have learned in the previous session. Like same procedure, your selling price minus all the cost, you will get your profit. Now, these are the 1, 2, 3, 4, 5, 6, 7. So, for short term, we had only 4. For long term, 1, 2, 3, 4, 5, 6, 7. Total, we have 7 deductions. Hope you are clear? Yes. Now, so in this, we have calculation like long-term calculation. You know, we have done some example problem in the previous session. I'll explain you. In the long term, we have a concept called index cost. What is this? Index cost. Why do we use this index cost? I'll tell you. Now, you purchased a house in 2000. In 2000, you know the value of the property. It may be around 10 lakh. In 2000 means almost it is 21 years back. The value of the property was only 10 lakh. Now you know the demand for the land. Now the 10 lakh had become 1 crore. At the time of purchase, it was how much? Only 10 lakh. Now what is the price? Now it is 1 crore. Hope you are clear? Yes. That 10 lakh, now it has become 1 crore. Now, as per the capital gain, how much you are supposed to pay tax now? So just assume that you bought land for 10 lakh and now you are selling for 1 crore. Assume that it is 1 crore 10 lakh now. What is the selling price? 1 crore 10 lakh. Now, what is your profit? Your profit is 1 crore. Now, are you happy with your profit? Yes, but tax will be high. See, what is the tax for long term? If you go for normal tax rate in this, understand the concept, understand this example, you will understand what is index cost. Now, 10 lakh was your cost. Now we are selling at what price? 1 crore 10 lakh. What is your profit? 1 crore. If you pay tax on 1 crore, what is the percentage? 20%. You have to pay 20 lakh tax. How much you are supposed to pay tax here? You are supposed to pay 20 lakh. See, your cost itself 10 lakh, but you are paying how much tax? 20 lakh as tax. Hope you are clear. Now, government, what they have done to remove this, see, it is more than your cost price itself. That's why government has given one scheme. What is that scheme? That is called Indexation Scheme. Why? Because 20 years back, whatever you spent 10 lakh that time, that is a huge amount for you. That 20 years back 10 lakh, now it is equal to around 50 to 60 lakh. Hope you are clear. Like your father or parents were earning 30 years back 500 rupees or 1000 rupees per month salary. Now they are earning around 50,000. Both are same only. Why? Because the money value was less 30 years back. Now the money value, the 10 lakh worth now, it is around 70 to 80 lakhs now. Clear? Why you pay 20 lakhs tax? Why you consider 1 crore as your profit? That is the reason, because of changes in money value, government has given indexation cost. That I'll come later. What is the numbers of indexation? I'll go with the example now. Earlier it was 10 lakh. The government will convert the 10 lakh to the today's currency, today's money value. Now, 2000, in the year of 2000, it was 10 lakh means assume that this 10 lakh now it is equal to 70 lakh. Your 10 lakh of 2000 now according to the money value, it is equal to how much? 70 lakh. Now, you have to consider 70, not 10. This 70 is called as index cost. Hope you are clear what is index cost. Index cost means whatever the price you bought 20 years back, the price will be converted to current your money value. Your price 10 lakh will be converted to current money value. Now what happens? Your 10 lakh is converted to what price? 70 lakh. Now you calculate. You are selling at what price? 1 crore 10 lakh. What is your cost? Index cost 70 lakh. 1 crore 10 lakh minus 70. You are supposed to pay tax only on 40 lakh. What is your capital gain? Only 40 lakh. On 40 lakh, 20%, it will be 8 lakh. Hope you are clear what is index. See, you are supposed to pay 20 lakh as a tax. After applying this indexation, your tax has become only 8 lakh because your 10 lakh has become 70 because 20 years back 10 lakh, now it is called as equal to 70 lakh. Now, hope you understood completely what is indexation cost. But the question is, sir, how come 10 lakh becomes 70 lakh? Who will calculate this? We should only calculate. How to calculate this? For that, in the next session, I'll show you. There is a certain numbers are there. If it is 2020, you should use this number. 2021, you should use this. 2022, year-wise, you have indexation. Year-wise, the money value chart is given. That if you apply, this will convert. Hope you are clear. Good. This is all about indexation. I hope that you have learned many concepts in capital gain so that in the next session, directly we'll go with the problems. Almost we are done with your theory part, and next session, it is all about your problems. Now, so I'll go back to your previous slide. Please take screenshot. Your agenda, the concept, computation of short term, computation of short term, computation of long term, computation of long term. So this is all about your today's session. Hope you understood how to calculate and also you understood what is indexation. In the next session, we go with the problem and in that we'll work out all the indexation, all the calculation, everything. From the first problem itself, I don't go for any basic problem. Why? Because already I have explained you in the theory. Directly we'll go for your question paper problems. Thank you.